So, how many of you all started on chapter 3 homework? Not many. Okay, well, I was hoping more people would have started on that. When is chapter 3 homework due? Let's do Friday. Okay. So what I want to do today is I'm going to change it up a little bit, and I want you all to go ahead once again and get groups again. And I'm going to have you all explain this problem to me. I'm going to give you all a little bit of time to work on it, and then after you explain it to me, I'm going to go over it with you and explain it to you as we go through it. Okay? Because this concept right here is going to carry heavy over into chapter 4. So I just want to make sure everyone gets this right now. I feel like we need to cover this because these are adjusting entries right here. So I want everyone to work through this, and this will give you a jump on your homework as well so you can focus on the quiz. Okay? So go ahead and get in groups. It's on page 150 of the text. Does anyone need to take a picture of it, or?
Yes, please.
Okay, I'll make sure everyone can get that. Let me take a list.
I pulled over. Oh, okay, either way.
Okay, who needed a copy of it again?
Yeah, okay, so, the first one was the supplies expense. So what we do is working with.
Yes.
Well, that would be.
Yeah, so is the whole thing November 30th? No, it
Anyone else have a copy of it?
Like I got a supplies expense, I got insurance, I got depreciation.
How does it know what we see? Sorry.
You're good.
See, because they were damaged. No, because it's not doing damage.
Hold on, so one was equipment, one was automobiles. So where did I get that from? 106, where was that? Oh, there we go, 106. I'm just looking at it for a second. 106 minus. Oh, there. Okay. So let me look at the start fix the one that's this one, it picked that one. It picked an insurance expense, which was it picked a supplies expense, which is that
Just
one.
different aspects.
It picked a salaries expense, which is that one. It picked an unearned service.
So I'm gonna let you all work on this for a few minutes, and then we'll start having you all
And then it picks
explain
utilities. So almost it said 7. So for some reason it said 7.
Yeah, so do you think you don't know why they picked it? Because if I would just read it and had to do it,
Yeah. Most of them appear to be expensive.
but they see that you
Okay,
picked it.
there's the only expensive.
It's right across from, I think, room 209. That's where it's at.
Like at least the only expensive they have 2.
See, what if I would have did, I would have did it on this paper.
Yeah, I would have done them all.
Right, it would have did them. But see, these supplies, I would be.
Did I say supplies? Yeah, okay. Yeah, it just picked 7 different funds, and he said I would have done them all. 7 entries that adjusted the accounts of November 30th. I don't see why. It has one in credit and one in debit, but I mean, all of them.
But I do know I need to always set up my debit.
Yeah. every single one of those 7, it like subtracted something. Yeah, I put supplies expense because, let me look back at this sheet, because I wrote it all down.
We can start from the beginning.
Yeah, expense debit is positive and credit is negative. So that's why it's a debit there. Supplies and assets, credit is negative. You're losing, okay. So like debit was an expense, they put it in the left because debit is when
You take away, right?
expense you add.
You add.
Because you're getting an expense, so you're adding as a debit. And then on the left side, or the right side, was supplies is an asset. And you're crediting the accounts, therefore you're losing money, so that's why they put it as a credit.
Yeah, just like.
Are you talking about like that thing when they put debit credit?
It's like,
It's in chapter 2.
it come and show you, it's in chapter 2.
Yeah, I'm pretty
Where
sure.
it come and show you. I know it was in one.
Like you talk about how to set the journal or the debit credit thing. The debit credit thing is like,
Different with that?
no, I'll just say the debit and credit thing I think is in 2.
So this is exactly what I was on.
Okay.
So, if I was to write supplies, maybe just come under expenses. That's what I was thinking.
Yeah, like what you mean, like
Supplies, expenses, and it's gonna be there. Yeah, that's fine. Look at my budget.
there was a big old chart and I wrote it in my book, but sometimes people can't read my handwriting, so. Way over here, and it told you exactly what each one of here is. This is what I'm talking about. This is page 63. Expenses, debit is positive and credit is a negative.
The next one is gonna be,
Well, you gotta subtract it, that's what they did, when I looked at it, cause it's subtracting 11,250.
2,400.
Yeah,
so I should put that up. But I'm gonna do it, don't even worry about it.
which one? Are you talking about the first row or
Yeah, so when
the?
I put this back in,
Yeah.
I was wondering how to put it.
Well, you go ahead and you subtract it, like you wrote it in parentheses is how they did it, and then they put the result of the subtraction in the debit, the first row, and then the credit, the second row.
I was thinking I was doing it right. Oh,
Oh, hold on.
keep it up.
Yep. I got statistics, and he's like, you need a calculator that has like a square root function, so I'm like,
I think I have that.
yeah, that
How
one's
are you?
specifically for like if you
Doing
have
good.
trig or like one of those higher up classes. So it'll show you, like, if you put in a graph or something.
Sorry, I'm late.
Are you fine? You're fine. We're working on the homework problem right now, so if you wanna just get in someone's group right now, or if you wanna work by yourself, however you wanna go about it.
What page is it on?
150, the top of 150, it's problem 34A. It's the adjusting entries. I'm just gonna have people in groups right now. They're trying to work through it, and then you all are gonna explain to me what's going on. Then we'll review it at the
The
end.
next one I put was insurance. I think it's doing by whichever one is the most liquidable or
That one is, was that how many? The lowest that I.
no, like it picked from liquidity, and he said he'd explain
I have
it
a
later.
question.
But yeah,
Mhm.
It says
means something
it's
like-
gonna be 7, right?
Like next one, I just know it did insurance.
Well, I got
expense.
9.
What did it do?
I don't know if I'm getting 2 wrong.
Yeah.
I
Because it wouldn't be the same if it's
You gotta write under it.
if it's adjusted. The numbers will be different, right?
Yeah, if it's adjusted, they could be different, so they could tie into one of the other entries. Because remember, when you make these adjustments, it's going to affect an income statement account and a balance sheet account.
You just put it in.
Oh, such as like
Each adjusting entry is going to affect both statements.
such as accounts.
Like say for
receivable.
here,
Insurance expenses.
let's look at supplies. Okay, so
Yeah.
that's reduced, right?
Yes.
Debit balance, debit balance. So what happened there? Why'd it go from here to here on supplies?
Oh, yeah, they put 2,000.
From the unadjusted to the adjusted. We had to make an adjusting entry. So what happened if supplies went down?
14,250, which is.
We've used them, right?
Yes.
So we're going to debit an expense for supplies. That's hitting your income statement. And we're going to credit supplies. So supplies had to be credited. So it's reducing the asset on the balance sheet. So it's affected your income statement. That adjusting entry affected you, increased your expense by the difference between the two, and reduced your asset of supplies by the same. So it affected both ones.
14,000.
And that would be. Let me see if I can find the other one.
3,850. Yeah, because they gave me the same results. They put it.
I'll show you another one
like
where you
that
might be
was on the
off.
bottom, and then they put 2,400
Look here.
as a debit here.
On the
right
bills.
there.
Okay. That's an income statement account, right? Because it's
Yeah.
this, right?
I didn't put that one.
But look here.
Yeah, it's the same number in both cases. They just want you to.
The
be able
difference
to-
there is the same.
Oh,
as this.
okay. Yeah, then I did.
So I
Okay.
knew that's where you got more accounts.
We're going over 348.
You wanna back up then? I'm sorry. You wanna back
Do you
up?
want us to back up and start over?
Yeah, I was, thank you.
Okay, so they want us to take, journalize the 7 entries that adjust for the account at November 30th. The first one we did was, the supplies expense. And that was way, where did it go? There it is. It's way over there in the middle. And it's, it's the same number for debit and for credit. You just have to write down basically what each one has. So the top one, we wrote as the supplies expense because expense is a debit when you're adding money, and then we wrote it as a credit for the next line, but we wrote it as supplies because supplies is an asset, and whenever it's an asset for credit, you're losing money, so that's why we put it as a credit in the second line. Supplies expense for the top, and then supplies on the bottom, and debit is on the left in the first line, and then credit on the right on the second one. But then for the first line, we wrote 11,250 minus 2,400 because that's that's what you do. That's the supplies. You subtract 2,400 minus 11,250. Like, let me see here. Like the supplies gave us two numbers. It gave us 11,250. I think. Hold on. Right. Yeah, 11,250, and then it gave us 2,400. So when we subtracted that, it gave us the 8,850 that we put into both spots. Does it make sense? Sort of. Okay.
Yeah. Cause right here, so we get there, you know what I'm saying?
depreciation expense, what'd you do? No, let me look and see what it did. It did 106,100 minus 94,500. Like it took this row right
Bless you.
here, accumulated depreciation of equipment on the bottom, but then the first row was depreciated expense. Because that depreciated expense, it only had the debit accounted for in that. I mean, it's the same number, but on the bottom, they took that and they subtracted it, and it turned out to be the same number. Like where it came from, they took it from here, from the accumulated depreciation of equipment. Yeah, they subtracted that from that, and it was the exact same number.
Oh, cause that's how we had to do it.
Yeah.
Okay.
Yeah.
I need to look at it.
Yeah, that's what I found. I had to erase a bunch because I wrote too. Yeah, it's like we were doing with the last one, just journalizing stuff. But each one has one where you gotta like subtract something to get the other value to make sure they're equal. In fact, I think the bottom, the bottom two, you gotta subtract on both, lines. So I got it. Are you working on the next one? Yeah, okay. Oh, okay.
Man, I gotta calculate it somewhere. I don't know. I didn't know he said no.
Yeah, that one. You get 11,600. Yep. Whatever you get, it should equal the number on the first line. If it doesn't, you gotta use different numbers.
How's everyone doing on it? How's everyone doing? Doing okay?
Accumulated depreciation for equipment.
Right,
Yeah.
all the way down.
Yeah. You said expenses accumulated, I think depreciation. So that's that's the numbers they use. Yeah. Problem. Yeah, if you get stuck, just let me know. Or if you have a question about any of them. Yeah.
That's what I was having a problem with. Trying to put it.
Yeah.
So I'm like, what?
Yeah.
So
I think he said we're supposed to technically be doing these about liquidity, but like I don't even know how to do that. I just followed the rules. Yes, you're right. Yep, and then that's one that you're gonna, I think, subtract. Let's see, salaries, expense, yeah, I subtracted the bigger one, I just followed the bigger one. Like there's one, like in this list that you put on the bottom that has like the exact same number. That one's 81. The salaries payable, the one you put on the bottom.
So, oh, I see.
Yeah.
Is that for promote to salaries payable?
Yeah, and that one's a credit.
Oh.
So,
And so, yeah, because I got two person budget to salaries payable.
yeah, that's the only one that he gave us for homework this week. So
It's a lot to pay.
there's a lot to it.
We had two of them though.
Accumulated depreciation.
We had two.
But this one is just accumulated depreciation, automobiles and equipment. Yeah, we have to.
Use that one, use that. I
Yeah, you already used both of those.
so we don't even work.
Oh wait, did I
I
not give you the?
can't
Okay. We've got technically, you got it four because they're all different. You got unearned service fees, you got service fee earned, you got utilities expense, and you got accounts payable. Where is it? And those are your last four. The two go with each other, so you technically only have two left.
So do you all want to go ahead and tell me what the first, explain the first adjusting journal entry?
Yeah, you just subtracted the numbers, right? Hold on. Okay, you see what I'm talking about?
Does anyone have the first one done and want to explain it to the class and to myself? How you did the adjusting entry and why you did it? Someone want to just volunteer? Or do you want me to volunteer someone? Okay.
Book prepaid insurance.
So you're starting. Let's move down the list here. Let's start down the list from the very top and go with the first one that changes. So let's see here. Let's start with the supplies one. Okay. So do you have the supplies one adjusted already?
No, book prepaid.
Okay, so tell me the prepaid one then. So we're dealing with the change from the debit balance of $14,250 in the unadjusted trial balance, and then we have a debit balance in the adjusted trial balance of $3,850. So someone explain to me what the journal entry is and why that journal entry is taking place.
Paid for certain amount.
Of insurance, right?
Yes.
So we paid in advance for an insurance policy, is what he's saying. So we've paid up front for a policy that we have not used yet, right? So that's going to be an asset, right? Okay. So why did the balance decrease there from the unadjusted balance to the adjusted balance? What happened to trigger that adjusting journal entry? So if we paid in advance for an insurance policy, right? It's a prepaid expense, right? That's an asset. So what causes that prepaid to reduce in value over time? We've consumed a portion of the policy, right? So if we've consumed a portion of the policy, what do we need to incur from that prepaid account? What would be the debit to this adjusting entry? Insurance expense. Why is it going to be an insurance expense for the debit? For one, debits increase expenses, right? We've incurred an expense because we've used up part of that policy, right? So we have to count for consuming part of that policy, which is an expense for the period. So if we've incurred an expense, now what do we have? What's our credit to that entry? Right. Why are we crediting prepaid insurance? Right, we've already used it, and we were holding that as an asset on the balance sheet, right? So if we've used up a portion of that prepaid insurance policy, then we have to incur an expense for the portion that we used. That's an income statement account, right? It's going to affect your income. It raises your expense. The prepaid insurance is an asset that was held on the balance sheet, right? So when we credit an asset, we know it goes down, right? So that affects your balance sheet. That reduces the asset of a prepaid expense. Make sense to everybody? Okay. Someone want to tell me about the supplies account? It's the third line item down. And the unadjusted trial balance, there's a debit balance of $11,250. And the adjusted trial balance is that there's a balance of $2,400. So what event happened to trigger that adjusting entry throughout that period? So you've used your supplies, right? So we know at the beginning of the period we had a count, we had $11,250 of supplies. At the end of the period, we made a count and we only had $2,400. So what journal entry do we have to make to reflect what we've used out of those supplies into our accounts? What's the journal entry?
Expenses.
Right. So what's the debit again?
Supplies expenses.
Right, supplies expense, because remember, expenses are debit balances, they increase the expense. So what's the credit balance? Right, supplies, why? Because we've used them, right? And supplies is an asset, right? So credit reduces our balance sheet asset, right? So the debit, the insurance expense, affects your income statement, right? We've incurred an expense, it's going up. Supplies being credited, that's a balance sheet account. That's reducing our supplies, right? Okay, what's the next one sticking out that someone did? What's another adjusting entry that we need to make?
Depreciation expense for equipment.
Right, so let's look at the depreciation expense for equipment. There's two areas on the trial balance that's going to be relevant here that we need to look at. One area is the lower portion of it, where the income statement items or the income statement elements are listed, and the upper part where the balance sheet items are listed. Okay. So if we're dealing with the depreciation expense for equipment, then where are we going to look for the amount of the depreciation expense?
Accumulated.
Well, that's the credit balance to it. You can see the change in the accumulated depreciation equipment. We can see that's a credit balance, and the unadjusted trial balance of $94,500, right? We can see the credit balance on the adjusted trial balance of $106,100, right? Okay, move on down your trial balance and look at depreciation expense equipment. And go out from there and look at the amount and see if it looks about the same as what you would see on accumulated depreciation on the credit balances.
Yeah.
Do you see the 11.6? Okay, so why do we see depreciation expense equipment, and that's on the adjusted trial balance for a debit balance? Why is that depreciation expense a debit right there? Same thing, is because it's an expense, right? It's just another type of expense. Expenses are debits, right? Okay, so why is the accompanying entry right there, accumulated depreciation equipment, why is that a credit balance? Remember we talked about contra accounts? In the lecture before last, I believe, we talked about how fixed assets are subject to depreciation because we capitalize them, meaning they're carried on the balance sheet, but over time, we systematically recognize depreciation in our income statement. So that's what we're doing. For that period, we're going to depreciate that asset, because remember, like something like a car, it depreciates. It doesn't stay worth the same amount of value over time. It depreciates over time. So that's what we're recognizing in our statements right here. So for that period, they're saying that equipment that we have for the month of November, we depreciated at $11,600. So if we depreciated $11,600, that's our debit, right? We have to incur an expense. So when we debit depreciation expense equipment, that's hitting our income statement, right? That's increasing our expenses. Okay, the credit to the accumulated depreciation, the change from 94.5 to 106.1 is just the offsetting. That's your credit to your debit for a depreciation expense. Why do we carry it in accumulated depreciation? What does that contra account do in terms of the value on a balance sheet for that asset that it's applicable to? Remember, what's the purpose of a contra account?
How much it's worth.
Do what?
I was saying, show how much it's worth.
So it's what reduces the book value of the asset, right? So when we buy an asset, it's carried at cost, right? So you have the asset, which is a debit balance, right? So in order to keep track of the amount of depreciation expense that we've accumulated over time throughout the different periods that we're operating in, every time we debit depreciation expense, we credit that same accumulated depreciation account. So that contra account, that contra asset account is always going to be listed directly below the line item of equipment, okay? So you'll have your historical cost, the debit balance, say, of $100 for equipment, and then accumulated depreciation, which is a credit balance, okay? Because remember, credits reduce debits. Okay, so say we've had $10,000 just for this example, and that accumulated depreciation. So the carrying value or net book value will be $90, okay? So we would depreciate again for $10 more next period. Depreciation expense equipment, $10, hitting your income statement. Credit accumulated depreciation equipment. Now it's going to be accumulated depreciation, $20. Now your carrying value or net book value is going to be $80. Does that make sense? Okay, same thing for accumulated depreciation automobiles. You see how the balance went up again in the credit balances from the unadjusted trial balance to the adjusted trial balance? So what have we done? What have we done there? What's the entry to accomplish that?
For the automobiles, accumulated depreciation automobiles.
That'll be the credit, right? What's the debit to that?
Oh,
Right, because we're incurring expense, right? We have to reduce the carrying value of our asset on the balance sheet. So when we debit depreciation expense, in this case, automobiles, okay? That's hitting our income statement for the period, the amount of expense that we're incurring for that month, right? Then the credit is always going to be accumulated depreciation. In this case, the accumulated depreciation equipment. So that just accumulates all those depreciation expenses that we realize every period, okay? Same entry. For depreciation expense, it's always the same thing. The only thing that changes is the systematic approach, whether it's straight lines, some of the years digits, double declining balance, all that, but you don't need to worry about that now. So in this case, it's always going to be the same entry. Debit depreciation expense, credit accumulated depreciation, okay? And it's always going to be for the same amount. Your debit's always going to be your credit, okay? Everyone good on that? Okay, what's the next entry someone made for the adjusting process here?
Salary expense.
Right. So what entry did you make for that?
I just put in debit salary expense and I created the salary payable.
Right. And what was the dollar amount? Your
It's
debit.
the difference between. I just need to. It's gonna be 8,100.
Right, $8,100. And you can see that's the difference between the $516,900 on the unadjusted trial balance, the debit balance, and then we have the adjusted trial balance, which is a debit balance of $525,000. So you're saying your entry was debit salary expense of $8,100 and credit salaries payable of $8,100, right? So what's happened there is we've had workers that have earned money, right? So we have to incur that expense, right, as a salary expense because they've already earned that money. They're entitled to get a paycheck, right? But we haven't paid them yet. So that's why we set the liability of salaries payable. Does that make sense to everybody? Okay, what's another entry? There's two more we need.
Unearned service fees.
Right. So what's the amount of that?
After it's subtracted, or
Just that you would what your debit or credit amount? What's the amount for the journal entry going to be?
9,000.
9,000. Right. And how did you find that?
Well, the top one was 18,000 minus 9,000.
Right. So that's the spread right there. That's the difference. Okay. Does everyone see that? For the service fees. Okay. So what's the debit? What's the journal entry for accomplishing that adjusting entry? So what's the debit again?
It's the unearned service fee.
Right, that's your debit. Why are we debiting unearned service fees? And then service fees earns your credit, right? So why are we debiting unearned service fees here by 9,000? Why are we debiting unearned service fees on that one when we're earning service fees? So we can see the difference between the credit balance on the unadjusted trial balance and the adjusted trial balance is the unadjusted is $18,000 credit balance. The adjusted trial balance is a $9,000 credit balance, right? Unearned service fees are what? Are they an asset? Are they a liability? No. They're a liability. Why are they a liability? Think of the first word I said. Unearned. We haven't earned anything. They've just paid us up front, right, for a service or a good to be delivered at a later point in time, right? So when we took their money, we had to set up a liability, right? So if the unearned service fee is reduced, then obviously we earned that money, right? So we've either provided a good or service, and now we can count it as revenue, right? So now we have to reduce that liability, right? Because we don't owe them as much of a service or a good because we've already actually delivered or whatever, capitalized on it, however you want to say it. So we debit unearned service fees. That reduces our liability for where we took their money up front without providing anything in exchange. And then credit service fees earned. Why are we crediting service fees earned here?
Because it's an accounts receivable. Technically, is it an asset?
Well, it's because it's a revenue. And I just want to point out revenues are credits, right? Remember, revenues are increased by credit balances, right? So it makes sense to everybody. Okay, what's the last one? It is accounts payable is going to be part of it. What set up the accounts payable? No, we incurred something, but we didn't pay something.
Oh, utilities.
Right, we used some utilities throughout the month, right? So you can see the utilities expense down here. The debit balance and the unadjusted trial balance of $12,900, and then $14,100 debit balance on the adjusted trial balance, right? So obviously, we've incurred a utilities expense there. But you can also see in the accounts payable, the difference, how it went up as well, matches that of the utilities expense, right?
Yes.
So that's where it's gonna tie in right there. So what's the entry right there? If we've incurred an expense and we're gonna pay someone later, what's the debit and credit? What's the entry?
Debit is utilities expense, and credit is accounts payable.
Right. Okay. What effect does that have on the income statement and the balance sheet? That entry. What does the debit do to one of those statements? What does that affect? Utilities expense. Is that affecting your income statement or your balance sheet?
Balance sheet,
What elements are measured on a balance sheet? It's the accounting equation, right? Assets, liabilities, equities. What's an income statement? What elements are measured on an income statement? Revenues, expenses, gains, losses, right? So if we incurred a utilities expense, what did that debit do? What statement did that impact? Income statement, right? We've increased our line item of an expense, right? What did the credit to accounts payable do? What statement did that affect? Accounts payable is what? It's a liability, right? We owe someone money. So where's liabilities accounted for it? Balance sheet. So that's increased our liabilities on the balance sheet. So do y'all see the trend here with these adjusting entries? Okay, so every adjusting entry is going to have it's going to affect an income statement account and a balance sheet account. Does that make sense to everybody? If it's depreciation expense, the depreciation expenses are debit. Income statement account, increased expenses. Credit, accumulated depreciation, that's a contra account to an asset of whatever the equipment is. That's a balance sheet account, right? Reducing the carrying value or net book value of an asset. Same thing we just said, utilities expense. We debit the utilities expense, increasing expenses on the income statement. You credit accounts payable because we're paying them at a later point in time. That's increasing your liabilities on the balance sheet. Does that make sense? Okay, so does everyone feel pretty good about the unadjusted trial balance and then making adjusting entries going to the adjusted trial balance? Decent? Does this help working it out like this? Okay, well we'll pick up on the next chapter on Friday, and we're gonna kind of go back and just review a little bit of the chart of accounts and journal entries and get into the unadjusted trial balance, adjusting entries. It's pretty much the accounting cycle, pretty much throughout a reporting period. So we're going to get to that. I just wanted to make sure everyone was comfortable with going from a unadjusted trial balance to an adjusted trial balance. Okay, and that's all the homework that's due Friday too. So that gives you a really good jump on your homework.